Hey there, Uncle Dennis. Hope all is well. Tell everybody hi. I just want to show you kind of what I've been doing here on the Spy. Um, and let me put that full screen. This is kind of the first thing I kind of have started doing is like to get a clear picture of it. These are obviously Fibonacci. I kind of been using that more for support resistance and pivot points. Um, and to kind of give me a feel for what it's actually doing. The green line is the 20-day moving average, simple moving average. The purple line's 50-day simple, and then the dotted blue is the 200. And so kind of, like I was telling you, I've kind of been using the golden crosses and death crosses here recently. You know, in here didn't work so well on that one. Not really for exact timing, but general just trend following, trying to get a feel for the trend. Has been kind of using that, and then also too using the 20-day moving average if it as a pivot point. If it breaks that, been kind of using that or using the 50-day too, and obviously the 200-day is pivot point, and kind of if it breaks that, it kind of is a warning signal. It's kind of what I've been thinking anyhow. This is a trend following indicator that I kind of stumbled on but it's based on ATRs. It's basically a trailing stop based on 3 times ATRs, and so I kind of just keep that on there for a guideline. But I do find it useful, and it's a quick way of kind of helps me, quick way to kind of put on there and kind of see where the ATRs are. Um, so I did just start entering a short position on the SPY. Today is the 21st, so 2 days ago or so. I got 5 contracts, 5 puts, um, and about $1,000 position or so. Buying those for about a month out, and I'll show you why I'm doing that and what's your thoughts. I'm gonna kick off the little video so I can show you the other screens that and indicators I've been using, but this is kind of what I've been using for a general broad get an idea and to use. I like using the Fibonacci points and um, more as a guide. Let me see here. One second. Let me kick that video off. Alright. Got to hide. Oh, here we go. Alright. Let's see here. Let me switch over. I got three screens. I know it looks pretty bunched up here, so obviously don't look at it like that, but I got 3 different time frames. I got the weekly, the daily, and 1 hourly, and obviously all the same. And so I'm gonna go to full screen, and then this is trading view. I don't know how you feel about that, how you like those, but trading view, they seem to so anyhow, I'll show you kind of the weekly, what I've kind of gone to instead of just using the MACD, and obviously everything is in weekly time frame. Slow stochastics, if I pronounce that right, is an indicator I've been studying and been using, and I found that it's right a lot of times whenever I was being wrong a couple months ago, so I've kind of went to that, to keep that on chart. And I like the weekly because it seems to really smooth it out and give you an idea. But definitely whenever it gets up in here is what I'd studied is, can kind of, you don't want to follow it exactly, but pretty good indication, I felt like. And then definitely whenever it starts dipping below that 80 is, I'm sure, you know, I don't know if you use that or not. I haven't seen it on the videos, but you know, it starts going there. But you know, from what I know, you got to be careful, kind of up top here. But yeah, so it just crossed. So I started entering a short position. Got Sam and obviously MACD, and the settings on here. 12, 26, and 9. Pretty sure it's exponential too because this has simple, but I'm pretty sure it's but this is the ADX and DI. I'm not use the STI. I haven't looked at this. I'm gonna find the STI, and I don't know if that's the same thing, but the ADX, it seems to follow the same principle it's used. Not sure. Settings 14 and 20. So obviously, I've just kind of decided that this is how I want to trade, or at least I think so anyhow. But yeah, and so it gives me a general feel, and go down here, and I like to go to the daily. I don't, unless I'm buying far out, I don't think I want to buy on the weekly. Oh, there we go. So this is the daily, obviously, and I'm trying to just stick to the S&P 500. You know, well, SP 500 gold, oil, and TLT for general movement until I kind of figure out what works for me. And but yeah, I started entering short really right here, mainly based on that weekly cross, you know, and I'm a month out, and I want to start buying some 3-month contracts, but it hasn't broken the ATRs, and but it's crossed here, crossed the weekly, and the MACD is actually crossed as of today. And it looks like the ADX is topping out, hitting that green line, which you can obviously go above it, but it looks like that's kind of topping out. I'm sure the reverse, it seems like it always does. Trump come on there and tweet something. But, and then obviously two, you know, on this chart would give me my golden and death crosses of the 20 and the 50. Actually, what really kind of started digging into things is I took a loss right in here, and mainly because I was trading off the hourly, and that's really why I went to 3 time frames. And this is kind of why I went to the ATRs too. Is the ATRs I think would have helped, and then the weekly. It's a big reason. This recent here in October is why I started liking the weekly statistics. I'll show you kind of what happened to me. And you see here, I just kind of found that it was pretty accurate there whenever I wasn't, and you know, it kind of just gives a. And then trying to trade based off the weekly is it's more powerful, I feel like. And whereas, okay, so daily, hourly here. go. Sorry for screen switching. So, you know, I don't keep the ATRs on there. It's just so short term. But what I've been doing on the hourly is for shorter term kind of entry periods. You know, I've been using the golden crosses, the cross of the 20 hour to the 50 hour. You know, and also using the 200 hour as a pivot point, essentially. Um, you know, to control risk and just, you know, in my mind, if it dips below that 200 hour, which is essentially it is around the 20 day, it's really close to the 20 day, so it kind of gives me um, a maximized view of the 20 day, and I feel a little bit accurate and quicker. But I kind of like the 200 hour, and kind of one reason why I like that is here, you know, what I was reading in Reminiscence of a stock operator, and one of the anecdotes in the commentary version is, you know, is that the 200 days basically defined bull and bear market. So I thought, well, if 200 day has, then the 200 hour would define it as a kind of a shorter term. That was kind of my thought. I don't know if that's right or wrong, but it seems like, you know, had I been using this before, it would have been profitable, you know. And I mean, but hindsight's always 20/20. But better than what I was using. The 20/50 golden and def cross, definitely, you know, it's a little bit quicker, you know, but obviously that'd have to be, you know, more, well, fairly attentive. You know, here is where the 20/50 hourly def and golden crosses got me. I was making money, and I ended up giving quite a bit of it back, and probably plus some. And then right in here was a really hard this area right here. You can see where it crossed, and, you know, right here I really thought, you know, it continued down and turned back into essentially a def cross. It was a 20/50 hourly, but whenever it came up above here, you know, I exited out of the trade. Made money, doing really well. From here on down, I took some profits in here, which was a good thing. I think I was up a couple 100% or so. And, you know, but this is kind of what really pointed out to me is, okay, well, kind of why I wanted to use this 200 hour mark to kind of dictate at a shorter term, shorter but not too short, you know. I mean, I feel like I'm using that, and it kind of gives me a buy and sell point a little bit. And I didn't, unfortunately, I rode this up only up into here, and I kind of didn't stick with my rules a little bit, or kind of just getting this, but you know, I should have still been riding this up here, and it looks like it's going to cross here, and we'll see what happens. But that's kind of what I've been doing, and yeah, you know, I found it interesting because here I wasn't trading necessarily like this, but I thought it worked really well just using that as a simple pivot point, the 200 hour, and whenever things were sinking, which I traded this. I wasn't trading it necessarily with this, but I felt like it would have done well in last year's market correction or crash whenever everybody was freaking out. Go short, you know, probably cancel, go short again, cover, go short, and then you got a golden cross there. You had one here too, but I kind of been using this as more of an entry point, you know. So I got $1,000 trade on now, you know, but I went ahead and put that on because of the weekly statistics. And then, you know, I feel like this is going to cross here. It's pretty close. I feel like that's probably going to cross, and it seems to be. But anyhow, don't take up too much time there. I just kind of wanted to show you and get your opinion. I know it's not the same stuff you use, but I kind of I don't know. It's just from my study, I guess, that and seeing what would work for me and what makes sense. I mean, I'm not sure about the ADX, but yeah, that's kind of all I got. Just hope all is well. Hoping to get down there to Texas soon, and yeah, definitely warmer than here. Really hoping to beat you in chess. Really hoping that. But other than that, yeah, I was gonna look at oil and kind of show you too why I went with the weekly statistics. No, it's not gonna load, is it? It's not just great. I think my computer doesn't know what to do with video software. Okay, well, that's not gonna load. All right, well, I'm gonna sign off here and say bye. We'll see you. Let me know your thoughts. Bye.